Hi, everyone. Welcome back to the Growth Playbook. Here is part two of the Bitcoin discussion with Dr. Alan Beaulieu and Ryan Tansom from Independence by Design. Today's episode will cover more on the risks of investing in Bitcoin and the how to get started if this is something that you're interested more in. There's certainly lots of questions that I have that as I have yet to engage in the conversation. And so I'm sure we'll be building out more of a Bitcoin series and including more episodes on the subject in the future. So stay tuned as we jump back into the conversation with Alan and Ryan.
Because I want to explain the risks of having it on Coinbase versus taking it off of Coinbase. But like, does that process make sense?
Yes.
It does. Yeah, I'm still curious where the 12 words come into play, though.
Okay. You want me to keep? You want to double click and just go into that and just stop me if I'm losing the air, if I'm not being coherent. So the when I think about, because I will never forget, and God bless my friend from college, because I screenshotted it. I told him what, like, hey, dude, like because he was like, oh, these hard wallets, cold wallets, seed phrases, blah. Like in my brain, I'm running a company, Ryan, shut up. And I'm like, dude, it's 55 grand right now. I'm screenshotting my phone so you remember forever. And unfortunately, my relationship with him is I constantly, people don't forget. So he didn't want to understand all of the stuff that we're like walking through right now because it was too complicated. And I'm hoping that we can make this accessible for like the average person. Like at the end of the day, you could go into Coinbase and you could buy it with your bank account or your credit card, like tomorrow. I mean, like it's that, or today, like you could get it all set up by the end of this call and you could have, you would have money or Bitcoin on Coinbase. And again, the risks of that is that Coinbase is a company with a CEO, right? They have a software platform that is based on having money move around and they collect fees on the transaction fees, right? So that's what FTX was. So like think about FTX, Coinbase, Charles Schwab, Fidelity, Ameritrade, they're all exchanges. It's a software that buys and sells assets. The problem or the risk of having leaving like there's this ism in the Bitcoin world of like, if it's not on not your wallet, not your money. Same thing, it's not your bank. That money on Coinbase, on my Coinbase account, is an IOU to Ryan Tansom. So it's a liability on their balance sheet. Sam Bankman-Fried was just lying. He's like, I have all this Bitcoin. And it's like, no, you don't. And people went in and asked for it. Just like a fractional bank reserve. It's like everybody went in for a bank run and like, you don't have any of the money. So then it's the proof of reserves. So Coinbase they owe me that money. So I have Coinbase risk by keeping my money there. Does that make sense? Because they owe me the
Yep.
money when I ask for it. And if they don't have it, then I'm screwed.
Yep.
Um, so then we move over to, like, I like to call it the three different layers of wallets, which is just like, where do you put your Bitcoin, right? You could leave it in there as an IOU. There's risk to that. But at least like my friend, I'm like, you would have gotten the price exposure. Now it's 115. That's a bummer. I took the risk of keeping it on Coinbase, going like, I think it's going to be worth that risk. Then there's three layers of wallets. The one, like the way I kind of like to break it down is there's something called a hot wallet, a hard wallet, and a cold wallet. And like the way to think about this, the hot wallet is it's on the internet, right? It's like it's hot, like you have electricity, like you're using electricity, and it's a bank, or it's another company that does all of the security, the backup of the phrase, Alan. So like think about it like the way I like to think about it is when you actually go get a Bitcoin wallet. So can we say, okay, you now transfer, you want to take it from Coinbase and you want to have one Bitcoin off of Coinbase. You could get it, you could go to another software company to host your Bitcoin wallet address, that 12 characters. You could put it on a hard drive. That's the hard wallet. Or you could put it on the cold drive, like, which is just a sheet metal over my head, where there's nothing tied to it. So there is a way, and the way I like to think about the wallet is like, in like US Bank, I have a routing number for the bank, and then I have a specific checking account number. Or that's exactly like you think about, you have a public address, which is like your routing number. And then you have your private one, which is your private keys, which is your 12 words. And then it's like, who is going to keep that? Do you want to keep it on a software company where there's some risk there? Or do you want to put it on a hard drive? And then like there's some, there's some risk there, some different ways to think about that. Or you could put it on like literally on a sheet metal. But at the end of the day, you're just trying to keep those two, the public and the private words safe so that way no one knows it. So you could go back and then grab a computer and say, okay, well, I lost everything. Now I can plug in my 12 words and I can still access my portion of the ledger that is owed to me.
Okay, that makes
Does that
sense.
does it does it
Yeah,
make
it
sense?
makes sense
Yeah,
to
I think
me.
you explained it very well.
Okay. There's a lot of complications in that, but I think it's just like, so, Hot Wallet is someone else, some other software company. You have a risk that Alan has a software company that is hosting my key, and then he goes out of business. Like, shit, that's 12 words that I wish I would have known. And then you could put it on a hard drive. Well, if you lose the hard drive, like the guy that was at the landfill, like, bummer, dude, you should have memorized your 12 words. And so like you're just kind of going through like, what's the best way to keep my public routing a number and then my private checking number safe so that no one else can use it.
Yeah.
Oh, that makes sense. So a follow-up question to our first, I think it's our first episode, it might have been our second, where it landed. The shit coins. You said if a CEO is involved, then it's a shit coin. So it sounds like we're still working through a CEO because we have to go through some sort of application software program to access the trading. How does that all work?
Yeah, it's the right question. And this is where like I'll be honest to everybody. Like I have spent most of my life trying to understand money so that way I could figure out how to save my time the value that I created. And so like as I get outside of where do I store my wealth and what's the risks of that and all the complications with business and valuations and stuff like that, the next layer, that's what I would call the next layer out of the core first principle. So then everything else that's out there, if you have a CEO, you literally have an income statement, a balance sheet, and a cash flow statement, and someone makes decisions of like, how many shares do we have? Do we want to dilute the shareholders? Do we want to, like, you know what I mean? Like what's like, so you just have a centralized body of person that's making decisions. A lot of these shit coins that I'm maybe unfairly bucketing into one big pile of shit, no pun intended, is there's starting to become companies that are popping out of this with very specific utilities. Coinbase has a very specific functional utility and they generate free cash flow based on the value that they're providing of a medium of it as an exchange. Right? So it's like great. And then like you say, okay, well, what are other companies that have a utility? Well, there's a lot of companies that are like launching on the Lightning Network to solve the transaction issue, right? There's a lot of companies that are trying to solve settlement, processing. And like we haven't gotten into this, but plant a seed where like I think it's so each block is like 216,000 transactions. And you say, okay, well, like Amex processes like I don't know if it's a trillion payments a month. Where Bitcoin, you can't actually process that many transactions every month. So there's now companies that are getting built out around to say, okay, well, we are going to settle outside the network and have one, like think about it like an EDI transfer at the end of a day with a company. They say, okay, we did all of these things today. Here's the final settlement. So there will be companies that then like say, okay, Kim, like, call it like QuickBooks will probably end up being one of them, or Stripe, where you have all these transactions that happen outside of it, and then they submit their ledger to the miner at the end of the day, and then it's reconciled. So like there's all these cryptocurrencies where it's like a lot of them are companies. Or like some athlete created their own stable or their own crypto coin. I'm like, what the hell? It's not money. It's like it's just proving that like they're just taking advantage of people that don't know what's going on, unfortunately. And it's completely wrong, in my opinion. You're it's the whole rug pull. Like, we're gonna do this, and then we take all the money before it collapses. I mean, it sucks. But there are companies that are bucketed into those shit coins that are actually have like very specific utility to help with transactions, to help with like management. Like there's like legit stuff out there. I just don't have the wherewithal with what I'm doing with my life to say, I mean, it's the same thing of like analyzing the free cash flow potential of every single company. I mean, like that's so much work. That's why ETFs came out, right? So it's like I don't want to deal with this because then you're analyzing per investment thesis based on a cash flowing company instead of money, which I think Bitcoin and gold and a medium of exchange and the storehold of wealth is what I've concerned myself with. Did that
No,
answer your question?
it did. It makes sense. Dad, do you have any follow-up questions for him?
No, no question. I just agreement. And to your point about valuing every company based upon cash flow and all the rest of that, the big unknown is always what's the CEO or board going to do to change that projection,
Yeah.
right?
Yeah. And they thought through their strategic plan, how they're going to
Yeah,
get repeatable revenue, what's their cost of goods structure. I mean, it's
that's
like a
the
lot of
risk.
work.
Yeah, that's the risk. And
Yeah.
with those companies that do all these transactions off to the side, there's obviously a benefit to that. But if there's been valuations in the value of the Bitcoin, for instance, during the day, and if it dropped 10%, or that's a lot, but if it dropped any during the day or went
Mm.
up any during the day, if you're only dealing with the end of the day stuff, you could have missed out on um, a transactional moment. If you had transacted earlier in the day, then it went up 10%, you may have been better off than all of a sudden having an end of day transaction. It's just,
Agreed. And I think that's a good lift off. Alan, if you want to touch on this for a couple minutes of where do stable coins fit into this whole situation, which, the US government, bipartisan nonetheless, is like, how do we get more people to buy US debt so we can fund our circus party? Like the way that I would articulate how to avoid what you just said of like the volatility, like yeah, Bitcoin since we spoke last, it went from 118 to 124 down to 115. It's like, whoa, that's exhausting. It's like, well, it's a small market that actually has supply and demand. Like there's a fixed supply, so pricing is volatile because it's not a deep pool. It's only $2 trillion now. Once it gets, you know, one note on the liquidity, and I never knew what that word meant, other than the fact that like now I get it with what I've learned is someone last week sold 80,000 Bitcoin in one day, and the price went from 118 to 115. So the market absorbed that demand without crashing the price, which is a freaking miracle. And I think it is a milestone that we are going to remember for a long time. It's the same reason a CEO of like Jeff Bezos or Mark Zuckerberg has to announce, I'm going to sell shares over the next 90 days so I don't crash my own stock, even though I just want to sell it for whatever reason. So the market absorbed that 80,000 Bitcoin, which was a milestone. But the uh the price is still going to go up and down because of all like it's a smaller market, people are buying and selling, and therefore I go back to if you need a specific dollar amount at a specific point in time for a medium of exchange, don't use Bitcoin. Like you store your wealth in Bitcoin right now until the medium of exchange becomes more mature with the software, with the more the liquidity pool of how big it gets. So the store of wealth, because if you look at over a 12 or 24 to 48 month, it's a 50% compound annual growth rate. But you like between last week and this week, I mean, it's volatile. So like
yeah,
don't do that for payroll. But I think where stable coins comes into play on is the stable coins is a very fascinating topic in itself because they're just bypassing the entire banking rails and the fractional banking reserves so we can get people in Nigeria to buy US debt to fund our party. And so now with the stable coins, you can get outside of the BS that I was talking about. And now people literally on Coinbase, so now you have like billions of people across the world who literally it's still just a dollar, but it's now on Coinbase. And to go, whoop, I want BTC. It's very fascinating because it's like it's no longer stuck in US bank, like the crap that I was going through. So I still think that US dollar is how we are going to be exchanging daily transactions for, I don't know, like a long time is my guess. And like that will take a lot longer because it's more consistent with how we're dealing with payroll every 2 weeks and inventory and, all the expenses that we have, where like the store of value is really one of the primary use cases I'm seeing of Bitcoin at the moment.
Yeah. I think one of the things you touched upon that struck a chord with me is that the Bitcoin, the value dropped. But if that had been a stock, it would have plummeted because there's no emotional content to what you're talking about versus day traders and professional investors have algorithms that move so much we're going to sell or
Yep.
we're going to short this, and individuals that are just going to all of a sudden go, I better sell, panic and all the rest of that. The emotional aspect being gone provides for a much more stable base. It certainly has its ups and downs and its risks, but I was just thinking of stocks that have,
It's a hard currency. It's a bearer asset. Like, I mean,
yeah,
it's not like, well, Sam Altman did his GPT-5 release and he sucked and it was boring. And now it's like, now at a $400 billion company, it's 300 because Sam didn't perform. You know
yeah,
what I
and
mean?
yeah, I
Like,
feel bad for them.
yeah, I was like, well, I know, I wish it was better too. Like, I love GPT. But I think there is still emotion because people don't understand. Like, what took the emotion out of it for me, Alan and Kim, is that like I understand this. So like I had like zero concern that it went up and down because I'm just like, it is what it is. Like, what do I know? Government's gonna keep printing money. People are getting old. We can't pay our bills. We have to print to keep going, which means where else can I put my money? And so it kind of goes back. I go back to this deductive reasoning to going, well, if all of a sudden, like every boomer disappeared and now we balance our budget and we don't have all these liabilities, I'd be like, oh, well, maybe the US dollar might survive. But so it kind of goes back into your whole thesis, Alan. It's like, okay, well, what is the alternative? That gives me a lot less concern on the day-to-day volatility. And I'm like, I'm still using US dollars to live my life.
Yeah, I'm doing something very similar in theory, not in Bitcoin, but with our equity optimizer, a large part of it's now AI driven. So while there are daily fluctuations, I don't look daily.
Right.
That's just a good way to go insane. But when I
Mhm.
look over by the quarter or by the half year or whatever, and I see the better returns than the market delivers, it's like, all right, here's a methodology that I don't have to worry about. It's proven, and I can just enjoy the benefits of. It's not
Mhm.
as protected from regulation, government intervention, and emotionalism as Bitcoin, but I get the theory and the process. It's
Yeah, yeah, yeah.
don't look every day. You're just going to go nuts.
Well, and your my guess is with that portfolio that you're not using to buy your Starbucks because you would have capital
Right.
gains issues. It would because of it's the same exact theory like you're talking about, where like you have a store of wealth philosophy and strategy.
Right.
And my guess, because I've read all of your books and I've talked to like you guys so much, is that it's probably trying to generate more than the 10%. So that way you're not getting diluted by the government printing money. And I
Right.
know that there's different bonds that you guys are interested in over the world because of, the different reasons. And then there's the energy sectors and the infrastructure. I mean, I have a lot of my equities in like literally I just pulled out your prosperity and the age of decline. And that's where my equities are. I just like went to ETFs that you suggested. Like, sounds good. And like, I was like, here you go. And but like
Yeah.
then there's the how are we spending our money every day is just different, so I don't have to tap into that.
Right. Exactly so. Exactly so. And I made my children a promise uh, many, many years ago that when I die and my wife dies, we're going to leave them absolutely nothing. So we're
So
just
you read that book, Die with Nothing, then, right? The Yay Kim, right?
do well because we're going to do well.
And we're gonna have fun.
A great plan. I support it wholeheartedly. All right, gentlemen, we got to wrap up our talk here for today. Are there any last 60-second thoughts you want to share with the audience before we head out for the day?
I do. I just want to thank you for bringing Ryan, bringing this all to us, and I hope the people who listen to this can take advantage of the wisdom and the path that you put forward, because I think it's a valued path, and I think it's something that they should consider. And like early investing, you don't have to do a lot of it in big dollars. You just start the drip going and just let it grow through time if you can. If not, at least you have some measure of wealth that's being created and protected, and you'll be glad you did that in the future.
I appreciate that, Alan. And like, I mean, the numbers out there, if you dollar cost average $10 a day for the last 15 years, you'd have 1.7 million bucks. And I'll just say, Kim, like, I got a D in accounting. I don't like, I've learned all of this because I'm trying to figure out how this all works myself. So like, this is all just a work in progress. And like, I will be honest, like I haven't been this vocal about my opinions about this stuff up until now because you provide a safe space. And Alan, you've been a great, counterpart to talk because I'm thinking through this stuff myself too. Like, I mean, it's a lot of work to think about and understand all this stuff. And I've seen an asymmetric opportunity for myself and other people where, like, what do we do to protect ourselves over the next 40 years when the government has got a lot of problems going on? It's still a great place to live, but like, so Kim, I appreciate it. It's the work in progress and it's a journey. And so like I hold the right to be wrong. But like I'm trying my best.
Well, we appreciate it. And I've had a lot of fun talking about the subject and I've learned a lot. So you taught me a lot about Bitcoin and it didn't take me nearly as long as it took me to learn about the cloud. So I appreciate all the insight.
It's just water vapor.
Well, folks, that wraps up our first round of conversations between Alan and Ryan. I hope you found it insightful and helpful in demystifying some of the myths that surround the topic. Thanks for joining. And as always, don't forget to like and subscribe.